Hi, I'm Josh Misk, Vice President of Investments at Invisor, and this is our Q3 2016 market update. Now, in today's investment landscape, governments and central banks play a huge role in shaping investment returns. And investors' uncertainty as to how they'll roll out that influence really causes a lot of volatility in the markets along the way, and those rough waters are the ones that we find ourselves currently having to navigate through. Now, a benefit to this type of intervention is that governments have continually shown that they're not willing to let any major ship sink, and in some cases, that kind of safety net can encourage the right kind of forward-looking leaps of faith that are required to push the economy forward. Now, we'll keep that in mind as we look back on this past quarter and on the past year to date, and as we look forward to the coming quarter and the end of 2016. Now, Q3 was a relatively solid performing quarter across the board. Central banks' expansionary policies really did a lot to lift markets, and volatility was generally muted. But looking back over the past year, we see a bit of a different story. In Canada, for example, the market performed quite well, but it was heavily influenced by an overheated housing sector rather than the traditional commodity sector or the financials. Commodities had a pretty fragile year, and the banking sector has been actively cutting jobs. And on the back of global central bank stimulus, the market has been showing us a surprising risk-on sentiment as emerging markets have outperformed and smaller cap companies have outperformed as well. But due to weakness in Japan and the uncertainty surrounding the Brexit situation, that broader market rally generally skipped over many developed nations. But I think what this does is it really helps us to highlight the importance of holding a well-diversified portfolio, especially when there's so much variance in performance across different sectors. So now we'll take a look forward at Q4 and some of the factors that we think will influence performance going forward, starting with added pressure on the Canadian market as changes in housing regulation, particularly a crackdown on taxing of capital gains, should really remove fuel from that overheated market. Another event in Q4 is the US federal election. Now, equity markets are pricing in a win by Clinton, so a Trump victory would be a surprise, and investors don't like surprises. There's also 2 federal rate decisions on the horizon. Analysts are expecting that there'll be a Fed rate increase in December, which, as we've said in the past, is a positive thing. That means that the economy is picking up. Also, a big driver of liquidity in the first part of the year was stimulus from the Bank of Japan and the European Central Bank. Global markets felt that stimulus. We expect those economies to continue their stimulus programs, although they may have a bit of a different flavor as there's more of an appetite towards fiscal spending on infrastructure and whatnot going forward. Finally, earnings season is just around the corner, and with markets near record highs and earnings coming in soft, the air looks pretty thin and choppy at the top, and I think we can expect some turbulence. And I think the key themes that we see underlying all of these events are that governments are going to continue to shape demand in global markets, and that the situation that we find ourselves in right now is really, it's ripe for volatility. So our recommendation when having to navigate choppy waters like these is to keep your eye on the horizon and to stick the course. So that's it for our Q3 2016 market update. I will see you next quarter.